Welcome back, my awesome people. In today's episode, I'll be diving into the world of cryptocurrency investments, focusing on two innovative and high-yielding ETFs, the Purpose Ether ETF, ticker symbol ETHY, and the Purpose Bitcoin Yield ETF, ticker symbol BTCY. We'll explore the reasons behind their recent performance, discuss their monthly dividend payouts, and examine how American investors can benefit from ETHY.U, the US dollar denominated version of ETHY. So for those of you that have been messaging me, commenting me, telling me to do a video on this, well, here you are. Now, before we dive into the recent performance, let's first understand what these ETFs are and how they operate. The Purpose Ether Yield ETF, ETHY, is an actively managed ETF that provides investors with exposure to Ether, the native cryptocurrency of the Ethereum network. What sets ETHY, ETHY, apart is its covered call strategy. This approach involves holding Ether and selling call options on a portion of its holdings. The premiums earned from selling these options are distributed to investors as monthly dividends. This strategy aims to generate regular income while mitigating some of the volatility associated with cryptocurrency investments. Similarly, Purpose Bitcoin Yield ETF, BTCY, offers exposure to Bitcoin, employing the same covered call strategy. By selling call options on its Bitcoin holdings, BTCY generates premiums that are paid out as monthly dividends to investors. This method provides a way to earn income from Bitcoin holdings, which traditionally they don't pay any dividends. The performance of ETHY and BTCY is closely tied to the prices of Ether and Bitcoin. When the prices of these underlying cryptocurrencies rise, the value of the ETF's holdings also rises, leading to a higher share price. And during periods of price decline, or volatility, the premiums earned from the selling call options can provide a buffer, generating income that can offset some of the losses. This strategy makes ETFs appealing to investors seeking exposure to cryptocurrencies with a reduced risk profile and regular income. A significant feature of ETHY and BTCY is their monthly dividend payouts, derived from the premiums earned through the covered call strategy, usually about double digits. By selling call options on a portion of the cryptocurrency holdings, these ETF premiums from option buyers. These premiums are then distributed to investors as dividends. The amount of the dividend can vary based on factors such as the volatility of the underlying cryptocurrency, the level of option premiums, and the proportion of the portfolio on which options are written. For American investors interested in gaining exposure to Ether with the added benefit of monthly dividends, ETHY.U offers a compelling opportunity. ETHY.U is the US dollar denominated version of the Purpose Ether Yield ETF. It provides the same investment strategy and benefits as ETHY, but is traded in US dollars, making it more accessible for American investors. The advantages of ETHY.U are the currency convenience. Trading in US dollars eliminates the need for currency conversion. So for those Americans looking to get a dividend payout from Ether, this will simplify the process. The monthly income through its covered call strategy, ETHY.U provides great dividend payouts, offering a source of regular income from Ether investments and risk mitigation. The covered call strategy can help reduce the volatility associated with direct cryptocurrency investments, making it suitable for investors seeking a more conservative approach to the current crypto market. Overall, the Purpose Ether Yield ETF, ETHY, and the Purpose Bitcoin Yield ETF, BTCY, represent innovative approaches to cryptocurrency investing, combining exposure to leading digital assets with the potential for regular income through covered call strategies. For American investors, ETHY.U offers a convenient way to invest in Ether with the added benefit of monthly dividends and reduced volatility. As always, it's crucial to conduct thorough research and consider your individual financial situation before making investment decisions. So, Jacob Rant, how has ETHY and BTCY been treating you? Well, my awesome friends, crypto isn't going anywhere, so get used to it. For over a decade, critics have been screaming and calling for the death of cryptocurrency. And yet here we are. Bitcoin, Ethereum, and countless other crypto projects are still alive and well. Despite multiple market crashes, scams, and regulatory crackdowns, Guess what? Crypto isn't just surviving, it's evolving. I am heavily invested in ETHY and BTCY for the past couple years, and I've had some amazing returns both in dividends and share appreciation, which has made me go all in on these two ETFs. I don't plan to hold forever, but I do plan to hold for at least 8 to 10 years. Governments around the world have tried to regulate crypto out of existence. China banned crypto mining, and yet miners just relocated. The SEC keeps attacking crypto projects in the US, but the industry isn't disappearing. It's adapting. Regulation doesn't kill innovation. It forces it to mature. Major financial institutions are already integrating blockchain technology because they know they can't afford to ignore it. The BlackRocks, Fidelities, and JP Morgans are dipping their toes into crypto, and when the biggest players in finance are involved, you know this isn't some passing fad. Then there's the argument that crypto is just a bubble. People love pointing to past market crashes as proof that crypto is doomed. But what they conveniently ignore is that every major technological revolution has gone through the same cycle. The internet had its .com crash, and yet here we are conducting our whole entire lives through the internet. Amazon and Google were once speculative stocks that faced heavy skepticism. Now they dominate the global economy. Crypto is going through its growing pains, but that doesn't mean it's going away. Every time the market crashes, the weak projects get weeded out and the industry becomes stronger. And let's talk about the real world use cases. People love to claim that crypto has no utility, but that's just ignorance talking. Bitcoin is a lifeline in countries with hyperinflation like Venezuela and Argentina. And let's not forget about stable coins. People who dismiss crypto as too volatile don't realize that stablecoins are already being used for cross-border payments, bypassing the outdated and expensive banking system. The traditional financial world is slow, inefficient, and built for the past. Crypto is the inevitable upgrade, and resistance is futile. Developers keep building, users keep transacting, and institutions keep investing. This isn't a fringe movement anymore, it's a global phenomenon. So go ahead, keep predicting crypto's downfall. We'll see who's still standing in 2035. So what are your thoughts on crypto and these two ETFs? Let us know in the comments below, and don't forget to like and subscribe if this video gave you some value. And remember, my awesome people, just like all the information that I've mentioned in my videos, always assess your risk appetite, always diversify, and please do your own due diligence, because I am just a clown on YouTube. Stay ranting.